Yeah, I can only say that, the obviously the Fed is having these discussions internally about, the dynamics that they're care for, which is obviously inflation, unemployment, and the labor market is in this process of having a supply-demand imbalance. We actually heard from in companies even as early as today about that labor shortage, and I think the slowdown of the labor market as a result of the fiscal stimulus, as a result of the unemployment benefits still did from the pandemic, that has actually created probably a longer horizon for that labor market to stabilize. And I think when you actually put that into context of what Fed officials are discussing is, well, if we go with the right path on employment, then is inflation going to get ahead of us? And, Jerome Powell has been very clear here. They are comfortable, letting the economy run hot. And therefore, they will probably pay less attention to the inflation pressures than they are on the labor market.
Yeah. All of this is happening with the backdrop of headlines about therapeutics, vaccinations of younger kids potentially coming. Today it's Gilead and remdesivir. You can imagine this afternoon Powell referencing some of the hope, at least, that if you control the pandemic better, some of those sticky issues regarding labor, the pricing of goods would make certainly their job a little bit easier.
Well, I think, the big question in their minds, and certainly these news will help in their decision, is whether or not, the tapering program is actually being as effective as they thought originally. Stability of financial markets is still, one of the, maybe on-call, Fed mandates, but their source of the QE and the source of the program, doesn't necessarily give them the marginal utility that they used to have. And therefore, these news and the fact that they're getting through the process of solving the pandemic issues, it basically makes their decision to start the tapering program and potentially rising rates, a little easier.
So, Omar, given the rough day we had to start the week on Monday, and the fact that stocks in general have pulled back somewhat from the record highs hit earlier in the month, given all the, uncertainty and questions around the Fed and other risks to the market right now, how should investors be positioning themselves?
Well, as long-term investors, we always encourage our clients to think about long-term. And, I would actually say that, market volatility and news that what we have had, this week, they're basically an opportunity for investors to reposition their portfolio. It's kind of interesting when we see the events that happen on any day of the week, because, even if the month ends today, this will be the second month this year where we will have a negative print on the S&P. So when you put that into context, and equity markets being at roughly 16% for the year, and thinking about bond yields still being in the 1.3 level, still thinking about long-term asset allocation, long-term opportunities for rebalancing their strategies, I think is still being part of what we tell our clients. This is an interesting time. Because we're moving into this next phase of the economic cycle. So repositioning this where the cyclical trade is pretty much towards the end of their run, and then reposition themselves from what is coming ahead, which is potentially higher rates, potentially higher inflation. It's something that we tell our clients to start repositioning themselves.